So anyway, so to start off, I'd like to talk about the PSEI. Of course, it has rallied quite a bit after hitting a low of 4,600. It's up by around 20%. Um, Actually, this is based on the market close, because if we were to use the intraday low, it's actually much lower. But anyway, from the close, it's up by around 20%. And I guess the question is, what has changed after hitting the low on March 19? Well, there are several things. First of all, the number of daily new cases have been peaking globally, even in the Philippines. Um, and of course, there are some treatments and vaccines showing some promise right now. Um, so, for example, there's Gilead's Remdesivir and Moderna's messenger RNA 1273, among others. So those are the leading treatments and vaccines that are already in clinical trial phases. No? And because of those two things, of course, we know that we're coming closer to economies reopening and things going back to pre-ECQ, pre-COVID levels. And of course, there's the US market going significantly higher. So this is the S&P 500. As you can see, it's up by a much stronger 30% versus the Philippines, which is up 20%. And I think one of the main reasons why the US is doing better than global markets is um, the Fed's move to do whatever it takes to support capital markets. Of course, they have the usual rate cuts. They've cut rates by 150 basis points, and they've rolled out several programs to boost liquidity of banks and financial institutions. But I think the most important move that the Fed has done is to do an unlimited QE, where it is buying a lot of bonds, different types of bonds. And because of that, you can see how big the Fed's balance sheet has been. So pre global financial crisis, if you look to the leftmost side, you can see how the Fed's balance sheet was still below 1 trillion. I mean, after the global financial crisis, it has gone up because of QE, but it took several years for it to reach the 4 trillion mark. Okay, so to grow it by a little bit more than 3 trillion, it took maybe more than 10 years. But now, in a span of 1 to 2 months, from around 4 trillion, it's close to 7 trillion. So that's how aggressive the Fed has been, and that has allowed, rates in the US in the secondary market to go down. And of course, that has helped stocks go up in price. Okay. Here locally, the BSP has also loosened its monetary policy together with other global central banks. So we see the overnight lending rate going down to 2.75%, so down by 125 basis points compared to the end of 2019. And the triple Rs have been cut by 2 percentage points. And going forward, the BSP has said that it plans to further cut overnight rates and triple R and may increase bond purchases. So it has already committed to buy um, around 300 billion pesos worth of bonds. Okay. Globally, governments are adopting aggressive stimulus measures. So this table, you may wonder, where did it come from? Because of course there are other tables or other economists that say that our stimulus measure is very low. This came from the ADB. Okay, and what they did was, for the Philippines, they included the triple R cuts, which is equivalent to around 220 billion pesos. So the 2 percentage point cuts on top of the other fiscal stimulus measures. That's why it's a little bit higher. But admittedly, it is small relative to other ASEAN countries. Nevertheless, it's still 4.5%. And then based on the DOF presentation, the NEDA presentation, they are at this point talking about a 1.5 trillion stimulus over the next few years, which is equivalent to 7.7% of GDP. Okay. Anyway, so that said, despite all the positive news, we're not expecting the recovery to be sustainable, at least in the short term, based on what we see. First, because we feel that the economic impact of COVID-19 um, is going to be severe. Next, valuations of stocks are cheap, but far from past bear market bottoms. And we'll talk about downside risk in terms of earnings forecasts. And finally, foreign investors remain net sellers. The economic impact, you can see here, we came out with the first quarter GDP. Kasi di ba nung una, parang naghuhulaan lang tayo eh. Like, what can it be? But I think if we look at the first quarter GDP, it's kind of a wake-up call because the consensus forecast for it was still to grow by around 2%. But as you can see, it's down by 0.2%. So that would imply that maybe in March, maybe during the 2 weeks that we had an ECQ, the GDP actually fell by 20 to 30% around that level. And that said, of course, paano pa kaya yung second quarter when we actually had an ECQ for more than a month? So it's very concerning if you think about it, and you can see how consumption was flat, government consumption fell to single digit, and then investments fell double digit, exports down. It's just everything's bad. And not surprisingly, okay, the S&P, Moody's, DBCC revised their forecast even lower. I mean, these are mga May forecasts, but prior to the GDP data coming out, I mean, they were still anticipating maybe a 1% growth, or maybe a minus less than 1% GDP drop. But now they have been more, I would say, bearish in their forecast. So anyway, the economy, as far as I'm concerned, is, yes, it's opening, but you can see here, given the decision on whether the economy will be opened or whether it will be kept in ECQ, is very strict, and it's very scientific. Okay, so as you can see here, the only time that you will go to the green area is during the recognition and preparation phase. And you have to get I guess, to get to that area. Sa bagay, pwede na rin naman yung deceleration and initiation, no? But the doubling case time has to be 7 to 30 days, no, to be in the GCQ. Pero to graduate from GCQ to relax GCQ, you still have to be in the green, which is very strict kasi the case doubling time has to exceed more than 30 days or a month before you can hit that. Um, and the critical care utilization rate has to be below 30. So I guess, um, given that Manila or the NCR, medyo malayo pa dyan, ginawa na lang ng government, pinalitan yung definition ng ECQ, ginawang MECQ, because they kind of realized it's really tough um, for Manila to continue being in ECQ for such a long time. Okay. Aside from that, uh, here are some of the key items of the House proposed new normal bill. Wearing of masks in public places required, social distancing of at least 1 meter. In the public transport, passengers 1 seat apart, payment through contactless methods, malls and commercial establishments to limit the number of people inside premises. No buffets or salad bars in restaurants, gathering to be highly regulated. I mean, if you think about all these restrictions, most likely they are, I would say, quite bearish on economic growth, because it deters a lot of people from going out and spending money. So I don't think it's going to be back to pre-ECQ level. Okay, and the results of the NEDA survey um, during April 5 to 8. So the consumer said 44% of them do not have enough income to meet basic needs. 44% of them lost their jobs or source of income. The MSMEs and other businesses 66% during the ECQ period had no sales due to ECQ. 33% had lower sales. 25.4% were doing layoffs. 74.9% were considering closures. And for the agriculture sector, 35% of them were not able to sell. Okay, so here's the part where I'd like to talk about the economic views, no. I think that the government has been talking about this, but the newspapers have been capturing them in, trickles or maliliit lang. They talk about, oh, our revenue is going to be like this, and then the disbursements, we're going to reduce it, etc., etc. Um, so what I just did was, based on what they disclosed in the newspaper reports, I tried to fill out this table and tried to derive all the interesting numbers. Okay, so personally, one of my key issues is, if you look at the disbursements, okay, even with the COVID 19 response, the disbursements are actually still the same. The budget is still the same, di ba? 4.2. Kasi ang nangyari is they just reallocated some of the spending from other items to COVID. So okay, that's fine. Yeah, it is small, but notice though that that said, the revenues will be much lower. Okay. And the drop kasi is going to be due to, I think, the lower income tax rate. I think they're factoring it in already. It's not only GDP growth, it's also tax incentives. Because as the DOF has said, they are not allowed to just uh, create a supplemental budget where they can just spend. They have to find ways where they're gonna get the money. So in other words, they're gonna ask the private sector to be involved. And in some ways, I guess they have to do that because, for example, if you look at their plans initially a month or two ago when they were talking about the SAP, 18 million families that they will give 5,000 to 8,000 pesos per family. 'Di ba parang I think the devil is in the details, or execution is much more difficult than the plans, because initially they said 18 million, and then what happened when they started to distribute? The 18 million became 23 million. So now they need another 50 billion pesos. So where are they gonna get that? I don't know. They don't know either. So it's really difficult. And then another thing is the test, which they said they plan to bring it to 10,000 a day, but right now we're still not there, diba? So maybe that's why, to a certain extent, they're passing on the responsibility to the private sector because they can't do it anymore. And that's why they're changing the definition of the ECQ to an MECQ, which did not exist 2 weeks ago. So it's like a closet GCQ. They're saying essentially you can do almost anything except that you have to take care of how you transport your employees, 'di ba? Kung pag-aralan niyo ng mabuti, what's the difference between MECQ and GCQ? It's more like, there's no public transport, so take care of your own employees, you know. So yun, I feel like maybe they've kind of realized they can't do it. So, and then of course they can't increase their disbursement, so they're trying to pass on the responsibility to the private sector. But of course, if they do that, one of the things that they have liberty to do is to reduce taxes. So fiscal ano rin yun, although mababa yung sabi natin spending natin sa um, COVID, the tax incentive is actually, that's a big portion of the GDP. So lalabas siya dito sa revenues, which is why if you look at the deficit, um, it's going to be, um, Teka, saan na ba yung deficit to GDP? Initially, di ba, we're only targeting 3 to 5%. Now it's 8%. So that's a big jump for the deficit. And of course, the debt to GDP from 2019, mga 40%, 39%, it's going to jump all the way to 50%. For me, what's more alarming is, say, the 2021, 2022. You can see how they talked about reducing the disbursements. Okay, so 2021, the disbursements of the government will be 4.2 trillion, which is flattish on a year on year. And then 2022, it will go up, but to 4.5 trillion. Okay, but then again, the deficit, as you can see, will still remain very high at 6% and 5% of GDP. So with that, we cannot be reducing our debt to GDP from, di ba kasi hopefully, we increase it this year and then next year we bring it down. Unfortunately, it will last for a few years because of the big deficit to GDP. And that is, 'di ba? Parang we're just hoping that the government will help the economy grow. But I think what's gonna happen is the private sector has to do its role because the government, in some ways, has their hands tied. Because even though um, the spending will be cut versus the old plans, you can see how the finances of the government will deteriorate substantially the next 2 years, which for me is um, you know, kind of concerning. Okay. Um, well, yun na nga. Ang ano namin, ang pinag-uusapan namin is, will we be judged so harshly because of our deteriorating finances when the rest of the world is doing the same thing? And in fact, maybe their deficit to GDP will even be much worse. Their debt to GDP will also be much worse. And of course, um, given how big their COVID response will be, and given probably how weaker their economic growth will be relative to ours, no? So let's see. Ayan. So reasons for the weaker government finances: lower revenues, weaker economic growth, and income tax cut from 30% to 25% in July this year, and slightly higher disbursements only for this year due to the COVID-19 stimulus and BBB plus. Okay, so before this, I forgot to talk about the monetary policy. Ako tingin ko monetary tama naman. Very preemptive. I think it's very much different than or much better than how the BSP responded during the global financial crisis and Asian financial crisis. Because if you were there before, you would notice how during times of crisis, interest rates in the Philippines go up substantially and the peso weakens. But this time around, we didn't see that. And the fact that the BSP loosened the monetary policy, you know, is ensuring that there is no tightness of liquidity, which is very important, especially now that the government needs to borrow money. At least, diba, there is no crowding out effect. But I guess the problem is, I mean, you can put all the liquidity you want, but if the banks don't want to lend, wala namang, diba, wala namang sense eh. But I think they're helping, and later Charles will be talking more about this. So if you ask me, is it necessary for the BSP to continue cutting rates and triple Rs at this point? I don't think it is necessary, because if the loan demand is not going to be there anyway, what's the point of boosting liquidity? 'Di ba? Yun na nga, you're giving free money to the banks. What for? But anyway, that's just my view, no. Anyway, going to valuation. So right now you can see this is the 10-year PE band of the PSEI, and you can see that we are cheap from a historical perspective. We're around 14.2 times PE. Okay, but my worry is relative to previous bear market bottoms. We are not yet there at this stage. Anyway, we're at around 5,500. During past bear markets, we bottomed after falling by more than 50%. Bottom PEs, 9 times PE, 8.9. I mean, at 4 or 5, we were there, close to that level. Um, and then the implied EPS drop. So just to discuss how we came about to the implied EPS drop, this is based on a target PE of 15.1 times. Okay. So if we were to imply that, if we were to assume that that would be the low PE, implied EPS drop would be around 37% at 4.5 and 23% at 5.5. So anyway, um, forecasts, I feel, still have downside risk. So di ba kanina, baka nagtaka kayo, how could 4.5 have a 9.1 times PE? Because during that time, the earnings forecasts were still at, or EPS forecast for the PSEI was still at the 500 level. Okay, but now, yesterday I just checked how consensus forecast for the PSEI is, and it's now at 393, which is down 14% year over year. For us, our EPS forecast for 2020 is down 21%. So we're a little bit more bearish than the market. During the global financial crisis, the EPS drop was 27%. Okay. But notwithstanding the 21% drop in our 2020 earnings forecast, we feel that there is downside risk because based on the first quarter 2020 earnings results of index stocks, at least those that have disclosed the first quarter results, you can see how a lot of them, like 12 out of the 24 that have disclosed so far, reported worse than expected earnings results. And if you actually look at the companies that disclosed better than expected or inline results, um, you would say that these companies are not naman the type na talagang you would get really excited about eh. Um, Even though they disclose, say, better than expected results, you're still anticipating some downside risk, say, for example, a security bank, no? Because it was, I think they had a lot of trading gains. So people are still bracing for higher provisions, diba? Even the power companies, it's better than expected, but in the second quarter, power demand fell a lot. So there's also a chance that they could disappoint. Going forward, there's still downside risk to the earnings results. Therefore, the PEs could still be expensive at this point at 5.5. Okay, and another worry that we have is that there are some large cap issues that are still trading at a premium to their historical average PEs. Maybe because of their large cap nature and people are just gravitating towards them. But if you look at their earnings, we're a little bit concerned there because they are also vulnerable to the weakness. So that's just one of our concerns. We don't know if these premium valuations will be justified going forward. Okay. And notwithstanding the fact that we have rallied quite a bit, the net foreign selling continues to be substantial. Total net selling is 31.5 billion since March 20. Okay. And what are the risks? Ongoing measures to contain COVID-19 fails and the virus stages a comeback, leading to reimposition of restrictions or what they call the W-shaped recovery. Development of vaccine and or treatment takes longer than expected. So I'll talk more about this later. And aggressive monetary policies lead to a sharp rise in inflation and currency depreciation. So that is a risk, but right now people are not talking about it yet. I mean, it's still not a near-term risk, I would suppose, because economic growth is so weak. Anyway, so what about the vaccines and treatments that are being developed? So um, is it really that easy to come out with them? So I just did a little bit of research, and well, the thing is, normally it takes vaccines and treatments more than 10 years to be developed because first you have the studies, Then you have the clinical trials, and normally the clinical trials have 3 phases, and these trials take months per phase. Okay, so matagal siya to make sure that these uh, these medicines are safe and effective. So you need 2 things to happen. They have to be proven safe and they have to be proven effective. And it doesn't happen. You can't prove it in a short amount of time, which is why you go through 3 phases. The first phase is you only have a little number of people that you test. The second phase, you need more people to do the test. And then third phase, mas marami pa all the more. Then you need a little bit of time to see over time, may mga side effects, etc., etc. Then of course, you have to have manufacturing and then FDA approvals, which again takes a couple of months. Okay, so let's see. Right now, Gilead's remdesivir and the Moderna's mRNA are in clinical trials. I think they are in phase 2. But then, di ba sinabi nga nila, even the Moderna vaccine is shady because they never really disclosed all the details of the studies. So, but anyway, let's see what happens. And then, even though treatments or vaccines are already in the clinical trial phase, less than a third of them proceed to the FDA approval phase. So, may chance pa rin na mag-fail. Okay, so our strategy, at least that the strategy that we tell our investors is to stay invested. I mean, if you're a long-term investor, definitely now is a good time to be invested in the stock market, given the cheap valuations and the still attractive long-term outlook of the country. But manage risk. We don't think now's the time to be chasing prices, or I don't think we won't have problems, or we will have a V-shaped recovery, which is why we're saying don't chase prices, buy slowly. We'll still have time to buy stocks, have a long-term perspective. No? And our stock picks, we preferred really the resilient sectors. So what are the resilient sectors? We like the retailers of essential goods, food manufacturers, telcos, and some utilities and power companies. Okay, the vulnerable sectors would still be the retailers of non-essential goods, restaurants, property companies, and banks. Okay, so, and then our stock picks, these are our stock picks: Pure Gold, URC, CNPF, PLDT, and First Gen. Yeah, the problem is if you look at them and our fair value estimates, these stocks are a bit on the expensive side, no? Which is why we are recommending investors to wait for pullbacks before buying them.